In 1973, a cartel of third world nations brought the global economy to a standstill. The oil embargo imposed by OPEC against key Western nations led to a decade of stagflation. It also signaled a power shift leading to the North-South global discussions. Hi, you're listening to The Why in History. I am Ajay Kaul, and today we're going to talk about the Organization of Petroleum Exporting Countries, or OPEC, its history, and its impact on the global political economy. In the early part of the 20th century, the United States was the top oil producer in the world. But Venezuela became the top oil exporter by 1928 and second only to the US in oil production. And the status as the world's largest exporter of oil led to a series of events spearheaded by Venezuela towards the formal creation of OPEC in 1960. Now, around the end of World War II, within the oil industry, an oligopoly emerged. Oligopoly meaning something better than a monopoly, but still just a few companies dominating the market. Actually, 7 companies, collectively known as the Seven Sisters, came to dominate the oil industry around that time. And these 7 sisters were Standard Oil of New Jersey, now Exxon; Standard Oil of New York, now Mobil; Standard Oil of California, now Chevron; Gulf Oil, Texaco; Anglo-Persian Oil Company, now BP; and Royal Dutch Shell. So how did the massive oil industry get converted into an oligopoly? The answer? The Akna-Kari Agreement of 1928, also known as As-Is Deal. In August of 1928, the heads of the big 3 oil companies at that time, Standard Oil of New Jersey, Royal Dutch Shell, and the Anglo-Persian Oil Company, met at the remote Akna-Kari Castle in Scotland to come to an agreement to end what they termed destructive competition among the oil companies at that time. The agreement centered around 3 key areas. The first was that the companies would maintain an as-is market share. That is, maintain their current market shares and not compete for each other's customers. The second was what would today be termed price fixing. They set production limits to artificially control supply and stabilize high prices. And the third, which was again price fixing, was that regardless of where the oil was produced, it would be priced as if it came from the Gulf of Mexico, including the cost of freight from Texas. What this meant was that the Seven Sisters would extract massive profits while slowing down the production in Middle East because it was a low-cost area and they needed to protect their expensive American investments. So the first cartel in the oil industry was actually formed by the Seven Sisters around the late 1920s and early 1930s. Now, because the Seven Sisters were trying to avoid the low-cost areas like the Middle East, the oil production in some of these areas dropped significantly. And one of the biggest impact areas was Mexico. In 1921, Mexico produced a quarter of the world's oil and was a major exporter at that time. But by 1930, Mexico's share of global oil production plummeted to about 3%. And this decline was partly an outcome of the Akna-Kari Agreement. Now, Mexico was a primarily agrarian economy, and most of the oil produced in Mexico was owned by some of the Seven Sisters and exported with very little profit staying in Mexico. So to eliminate this dependency on the Seven Sisters, President Lázaro Cárdenas nationalized the entire oil industry in 1938. Leading up to the nationalization, was a lot of unrest between the Mexican oil workers and the Seven Sisters because the oil workers were demanding better pay and working conditions. The Supreme Court of Mexico actually sided with the workers and ordered the Seven Sisters to meet their demands. But these firms refused to comply, and on March 18, 1938, President Cardenas signed a decree to seize all assets of these foreign oil companies towards nationalizing the Mexican oil industry. Subsequently, Petróleos Mexicanos, or Pemex, was established to manage the nationalized oil resources, giving Mexico complete control over its oil. So Mexico became the first nation to establish that a natural resource like oil needed to be under the country's own control. There's an old Indian saying, when living in a pond, you have to be on friendly terms with the crocodile. So while Mexico shut off the Seven Sisters, Venezuela decided to engage with them, but on their own terms. So it told the Seven Sisters that you guys can continue to own the oil assets of our country, but the profit that you make will need to be split between you and Venezuela 50-50. So in 1948, Venezuela became the first country in the world to establish a 50-50 profit-sharing model with the oil companies. But Venezuela was aware of the global competition for oil, and it knew that Venezuela alone could not sustain a 50-50 profit-sharing model. So Venezuela's oil minister, Juan Pablo Perez Alfonso, who's often called the father of OPEC, used the 50-50 profit-sharing model as a diplomatic tool and a blueprint to unite the global oil producers against the dominance of the Seven Sisters. So in 1949, a delegation of Venezuelan officials visited the Middle East to share details around this model and convince these countries to get on board. Subsequently, in 1950, Saudi Arabia became the first Middle Eastern country to sign a 50-50 profit-sharing deal with Aramco. Venezuela eventually pushed beyond this 50-50 model and amended its laws in 1958 to increase the government share to 65-35. But there still was one problem. Despite the profit sharing being more favorable to the oil producers, the multinational oil companies, specifically the Seven Sisters, still controlled the production of oil. So in April 1959, during the first Arab Petroleum Congress in Cairo, Venezuela's Juan Pablo Perez Alfonso met with Saudi Arabia's Abdullah Tariqi at a yacht club and signed a gentleman's agreement to coordinate policies, defend prices, and establish national oil companies. This essentially laid the groundwork for the creation of OPEC. The trigger point came in August of 1960 when the Seven Sisters unilaterally cut the price of oil to combat a supply glut and competition from the Soviet Union. Around the 1950s, the Soviet Union had attained the number 2 status with respect to global oil production. The immediate consequence of the Seven Sisters slashing the price of oil was a sharp drop in the tax revenues of the oil-producing nations. So Venezuela's Perez Alfonso and Saudi Arabia's Tariqi immediately telegraphed each other to organize a meeting in Baghdad. So less than a month after the Seven Sisters had slashed the price of oil, on September 14, 1960, Venezuela, Saudi Arabia, Iran, Iraq, and Kuwait officially formed the OPEC. That is, the Organization of Petroleum Exporting Countries. The primary aim of OPEC was to ensure that oil-producing nations, not the private companies, had the power to stabilize international oil prices. So, how did Perez Alfonso come up with the idea of OPEC? He was heavily influenced by the Texas Railroad Commission. Between 1948 and 1958, due to political instability in Venezuela, Perez Alfonso went into exile in the US and Mexico. And during this period, he studied the US oil industry very closely and was very intrigued by the Texas Railroad Commission. During the 1930s, when the US state of Texas virtually dominated the world oil production, the Texas Railroad Commission, which had the jurisdiction to regulate the production of oil and gas in Texas, intervened and set the rate at which every oil well in Texas could produce, a process that came to be known as proration. And the aim here was to control the oil prices and conserve the state's resources. And it was this concept of proration that OPEC adopted to prevent overproduction and collapse of global oil prices. The primary aim of OPEC, though, was to assert national sovereignty over their own natural resources. And there were two interesting conditions that were laid out for membership of the OPEC. One, you needed to be a significant oil exporter. And two, you needed to have the same interests as the other members of the OPEC. Same interests as the other OPEC members, which meant superpowers like the United States and the Soviet Union could not become OPEC members because they did not face the same challenges as these third world oil-rich nations. So how did the Seven Sisters react to the formation of OPEC? Initially, they tried to placate OPEC. Notably, Shell implemented a minor price increase in the 1960s to appease the OPEC members. But the OPEC dismissed that as too little, too late. The 1960s could be regarded as a very successful decade for OPEC because OPEC was able to get a posted price which was fixed while the oil companies sold the product at market prices, which at the time was on a downward trend. The posted price stood at $1.80 per barrel for most of the decade, but the market prices fluctuated between $1.30 and $1.50. And as the world stepped into the 1970s, oil became a producer's market. And then came October 1973, when OPEC really flexed its muscle and imposed an oil embargo upon the United States and its allies for supporting Israel during the 1973 Yom Kippur War. The embargo meant that oil shipments from the Middle East to the United States were stopped, which meant the United States had to rely on its own domestic oil to meet the consumer demand, but that wasn't enough. As a result, the OPEC members reduced oil production by 5%, which led to the price of oil quadrupling and a massive economic disruption across the globe. The massive economic disruption was a global stagflation triggered by the reduced supply and high price of oil. Stagflation meaning stagnant growth and high inflation. But why would the OPEC try to disrupt its oil business over a political issue? Especially when a few of its members did not have a huge stake in that issue. Members like Venezuela, which was in South America, and Iran, which at that time was a US ally. The answer lies in the 1971 release of the US dollar from gold, which led to a huge devaluation of the dollar. And this led to a huge revenue drop for the oil-producing nations because their revenues largely consisted of US dollars. All of a sudden, the OPEC nations realized that they were supplying massive amounts of oil to Western nations at a pittance. So they were desperately seeking an opportunity to cut the supply and raise the price of oil. And that opportunity manifested itself during the 1973 Yom Kippur War. As OPEC asserted itself on the global front, the Seven Sisters gradually started getting relegated to the background. The Arabian American Oil Company, or Aramco, which was formed by US oil companies to explore oil in Saudi Arabia in 1933, started witnessing a gradual acquisition of ownership by the Saudi government, increasing its stake from 25% in 1973 to 60% in 1974 and achieving 100% ownership by 1980, making it Saudi Aramco. Venezuela too nationalized its oil industry, creating the state-owned Petróleos de Venezuela South America, or PDVSA, on January 1, 1976. It was formed after Venezuela wrested control of the assets of the private oil companies operating in Venezuela. So as this group of third world nations brought the world economy to its knees, it brought into limelight the immense power the developed world had over the third world nations. And this led to the emergence of what came to be known as the North-South Dialogue. A group of leaders led by Houari Boumediene of Algeria, which itself was an OPEC nation, used the United Nations platform in 1974 to call for a new economic order to shift power from the North to the South. North meaning the developed world, South meaning the third world. And the group of nations were a mix of the countries within the G77 and members of the non-aligned movement. And their primary issue was that the developed nations tended to charge high prices for the finished goods while pricing the natural resources and raw materials at a pittance. So their primary demand was a greater control over their natural resources, fairer trade terms, and regulation of the multinational corporations. Essentially, what OPEC had already achieved with oil, they were trying to replicate for other natural resources and raw materials. Coming out of the 1973 oil crisis, OPEC realized that it was in their best interest to adopt a strategy that stabilized prices. That meant a regular supply of oil to consumers at steady prices that would ensure a steady stream of oil income to the producers. But there were other global shocks that happened starting in 1979 that benefited OPEC in a major way. The first was the Iranian Cultural Revolution, which led to oil production in Iran being halted. And this was followed by the 1980 Iran-Iraq War. For the first time, two OPEC members were fighting against each other. The markets went into widespread panic, and the price of oil doubled to about $40 a barrel. OPEC members increased supply to benefit from the skyrocketing prices. But another outcome of the 1973 oil crisis was that the Western nations had gone on an exploration spree to find new sources of oil to supply their domestic markets. And new sources did emerge in the North Sea, Alaska, and Mexico. So when the oil prices skyrocketed and OPEC increased its supply, so did these new sources. And suddenly there was a glut of oil in the markets, which brought the prices crashing down. So in an attempt to keep the oil prices steady, OPEC reduced its production levels. But the outcome was that the non-OPEC oil countries usurped OPEC's position in the industry. All of a sudden, OPEC now controlled just 1/3 of the global oil production. Through most of the 1990s, with the collapse of the Soviet Union, the top 5 oil producers in the world were Saudi Arabia, USA, Russia, Iran, and Mexico. But despite all of this, OPEC has continued to be center stage and has been a key variable in the global economy. In 2003, as China started emerging as an economic superpower, the demand for oil rose drastically and hit $100 a barrel in 2008, hitting $150 a barrel by July of the same year. OPEC immediately called an emergency meeting to discuss the skyrocketing prices, concerned that the high prices could derail the world economy and bring the demand crashing down. And to offset this risk, Saudi Arabia agreed to pump as much oil as possible to meet the consumer demand. Overall, one can say that OPEC has been fairly successful as an oil cartel, though their primary objective of controlling the price of oil has been a very mild success because there are several other economic factors that have driven the price of oil. And it is on that note that we end this section of the program. On to the quiz section. Question from the previous episode. Which of the following are true about Greenland? Greenland is the only region in the world where people have more boats than motor cars. And Greenland also is the least densely populated region in the world. With respect to the other options, fishing is the mainstay of the Greenlandic economy, and Nuuk is the capital of Greenland. So the answers are A and C. Greenland is the only region in the world with more boats than cars, and it's also the least densely populated region of the world. Question for the current episode. What changes directed at energy savings were implemented across the US to combat the 1973 oil crisis? Were these A, reduction of the national speed limit to 55 miles an hour, B, enactment of a year-round daylight savings time, C, ban on the use of trucks and SUVs, or D, flying limits to curtail air travel? Once again, what changes directed at energy savings were implemented across the US to combat the 1973 oil crisis? Were these A, reduction of the national speed limit to 55 miles an hour, B, enactment of a year-round daylight savings time, C, ban on the use of trucks and SUVs, or D, flying limits to curtail air travel? The answer will be provided in the next episode. That's all we have in the current episode. We meet again in 2 weeks with another interesting and exciting episode on world history. Till then, stay safe and keep exploring the why in history.